Good evening. Hi.
Okay, guys, how are you? It's 8. I beg to start. Sharon, Daisy, if you may confirm that you can hear me, then I start.
Yes, we are hearing. I am hearing.
So we're going to just go through coursework IAS1, okay, with the same question, which you already have answers with. So I'll write B first, since you already have the answers. You just ask where I have not understood. Okay, so maybe what's clear is that for IAS1, always have your headings or titles ready. Okay, like for each page you have compulsory requirement they want. Is it P&L? Then the other page, balance sheet, the other page, and there's an equity. Okay, have them clear, then deal with the additional information first. Okay, so note one was saying On 1st April 2020, we decided to revalue the factory premises. And once you read the statement and it has a PPE item in it, you will have to draw the PPE schedule. Okay. So without a waste of time, I can draw it and we see. Maybe just before I draw it, we can see the item that we have. We have factory premises and plant and equipment. Okay, those are the two items that we have. So you come under your workings and you have about 3 columns. Okay, so one, this is PPE schedule. Okay, so you have plant and equipment. Then you have a factory. Those are your 2 PPE items. And then you carry all the information given in the balance sheet here. So begin with cost. At the start of the year was ending on 31st March. So it will start on 1st April. Okay, and confirm which year it was. Okay, 2020. So it ended in 2021. Okay, so it says cost at 1st April 2020. Then the costs were given clearly. Let me just put them, they're here. I hope you have a question already. You already have the question, so I don't want to keep sharing this question for purposes of time. So I have 40,000 for factory. Okay, and then we look at PPE. I mean plant and equipment. We have 100. Okay, then you bring estimated depreciation as at the same date. Okay, still it is given in the trial balance. You just go and pick it the way it is. For factory, it is 10,000. And then for plant and machinery and equipment, you have 36. Okay, so our carrying amount brought forward or brought down or at the opening date, it means the same thing. You have it as the difference. Let me put this in negatives to confirm that these are credits, not debits. Okay, so we have these as our carrying amounts. Okay, that's just at the start of the period, once you're just starting there. Okay, then you can go to additional information and see what it's saying. Okay, it says that on the same date, which is 1st April 2020, the beginning of the year, Genius decided to revalue the factory for the first time to its market value of 50 million. So you are revaluing to 50 million. Okay, so if we go to our workings, we're saying that as far as factory is concerned, we're saying that our revalued amount is 50 million. Okay, and we're saying, of course, here in the value, so ideally it will remain the same. Okay, so we're saying there's a gain on revaluation. Okay. So which is the difference between the two, between the new value and the old value. So we have a gain of 20. And we said whenever you have a gain, you must take it where it belongs. And we're saying ideally to go to the statement of profit or loss. Let me put it here this time. Statement of profit or loss and other comprehensive incomes. Okay, allow me use the shortcuts just to be fast. Then you have the OCI. Okay, so saying have gain and revaluation is 20,000. So by doing that, you have done the double entry. Okay, that was debited here. That's why your asset is increasing to 50, and it is credited here under the OCI. Okay. So we continue with the note. The note says still that okay, let me share the question. It says that prior to this evaluation, guys, please mute as soon as you
Your question.
I was saying prior to this revaluation, factory premises were being depreciated over its useful life of 40 years. Okay, they're saying that the remaining useful life of the premises at the beginning of the year was estimated at 25. Yeah, so meaning that when they revalued, even the useful life of the factory was also revalued. Okay, it was 40 then before revaluation, but after revaluation, we're saying it's actually 25. So we revalue based on the new evaluation. In case they didn't give you this information where they have revalued its useful life, you would use the old years less the number of years that it has consumed so far. Okay, so idea they didn't even give it to know that it's not important. You're supposed to just use the 25. Okay, but another day they will tell you that we have used this asset for 5 years so far, and maybe then it was 40 years, and then they're silent. So they would know that you have 40 minus 5, and you have 35 as the useful life. Okay, but now here they were clear. They said it was 25 years now. Okay, so we're going to depreciate it using 25 years. So if I go to the equation, we're saying depreciation for the year, which usually occurs at the end of the year. Depreciation. For the year, we're saying it's going to be, let me put the working here, 50 million divided by useful life. Remaining useful life. In this case, it was revalued, it is 25. So it's 25. Then you have that by 25. Okay, when this when depreciation is in the PPE schedule, it's a negative. It actually represents accumulated depreciation. So by doing this, you have debited, you have credited, sorry. So you want to go and debit by going under expenses, instead depreciation. Specifically, we're looking at the factory. Then input it independently. Okay, it's not supposed to be. Okay. Now this is IAS1 and this is accounting 3. So with expenses, they're classified. You don't just bring it here like I've just done. Expenses come here as a working. And what you bring here is after your sales, you bring here your cost of sales, and then you have, okay, yeah, you have gross profit, of course, gross profit. Then you'd have expenses. Okay. But now, as or at this level, the expenses are classified. I think the idea is to make them few or something like that. Okay. So in doing so, they're classified into admin, distribution, and cost of sales, which you already saw up. So what comes here, they usually come from the workings. They come as a full or a complete figure. So we shall have working number 3 or working number 2. Let me call it working number 2. It's 2. We're saying expense, expense allocation. So you have a cost of sales, then you have admin, then you have distribution. Okay, so under cost of sales, we're saying now the depreciation that you got earlier that would have gone under expenses, we don't take it as an expense line under the profit or loss. We take it under cost of sales. So it's part of cost of sales. So we shall bring here 2000. Let me even split to show that this is factory. Okay, and to be 2000. Okay, so by doing this, you're trying to complete the double entry of this 2000 here. It was credited there, so it's debited here. Okay, then we continue. So we're done with that note. We got the next note. It says that in October 2020, okay, this company sold a piece of equipment. Okay, in October 2020, so meaning a few months later. You can go and confirm when. Okay, so if our year is starting, okay, we need to put it somewhere here. Looking at disposal of equipment. This is part of the PPE. They're saying that in October 2020, that's when you had a disposal. Okay, let's clear. So then they said, if we take it to the question, they say that it was purchased in March 2019. So the date of purchase 2019. So this asset we're referring to purchased. Whoever has a video on or is kindly can remove it. Okay, so purchased in March. They're not even specific with the date. So in March 2019. Okay, sir, I think you're the one with the video on. Kindly remove it, whoever. Oh, it is Esther. Then, so these dates are important because you want to know when you bought it, and then supposed to determine the carrying amount and things like that. So if I take the question again, we're saying that shared notes. Okay, they say that the equipment cost 10 million and it was sold for 7 million. Okay. The cost is 10 million. Okay, then zeros, and it was sold, and supposedly it was sold for 7 million. These are proceeds. What you get after selling. All right, so this is what we have as our information. Then they said regarding the depreciation, because at the end of the day, if there's a disposal, you want to know the accumulated depreciation. So they say that the sale proceeds was credited to the sales revenue, the general ledger, and we know that whenever you make a disposal of a non-current asset, the sales account can never be affected, or the sales. Okay, but they made an error and they included it here. And they said instead of the disposal account. Now, depreciation of this plant and equipment is charged at 20% per annum on a reducing balance. 20% per annum. Okay, so depreciation. 20% reducing balance. Then there was an interesting note that Mr. Frank said that you don't consider it. Here, he said a full year's depreciation is charged in the year of purchase and none in the year of sale. So Frank said that this standard does not, this statement doesn't apply to IAS16 because IAS16 doesn't say this. IAS16 says you apportion on all years that you're using it for. Okay. And because of that, if there's a company policy that is like this, that goes against any standard, the standard takes it all, or the standard is sets a precedent. Okay. So it always be we always use a standard instead of the policy. So having said that, that statement was not in any way important. Okay. So we're supposed to ignore it because IAS 16 doesn't allow for it. Therefore, we are now going to apply the few things we know about depreciation and stuff, okay, and disposal. So for disposal, the first thing you're interested in, usually the cost. Okay, cost. This cost, what we do is if you're disposing of, you're going to debit the disposal account and credit the asset account. In this case, it's the PPE. Okay, the cost, and the cost is 10M. Okay, so we can begin with that. So with this, we're saying you have to open a disposal account, which I'm going to open. Maybe I should open it now. Okay, so we have a disposal account. So the account usually disposal account helps you to determine whether there's a gain or a loss, and I'll share also a shortcut for it. So if this is my T account, we're saying that by debiting the asset, we're saying you come to the T account and you put here as cost. Okay. So the cost, you can call it where the assets, where it's coming from, which is the PPE, and it's 10M. Okay, then the double entry is that you go to the credit to the asset and remove the 10M also. When I come to the asset this side, I'll say disposal. Okay. This is in regard of cost. So when you come on the factory, remove the 10M. It's a negative because any credits on this schedule, they're actually negatives, they're subtractions. Okay. Then we continue. Then the other thing that you're worried about whenever you talk about disposal, the accumulated depreciation of the asset that we are disposing of till the date of disposal. Okay, till the date of disposal. Now, what happened is we're using reducing balance first of all, and we're saying the asset was bought in March 2019 and it was sold in October 2020. So when you count the number of months involved, we're saying you have March, April, May, June, July, August, September. Okay. You wouldn't consider October, reason being, I can just say it here. You're saying if you say, for example, since I didn't give you a specific date, it's assuming it was 1st March. Okay, 1st March 2019. To go up to which date? To go up to 1st October 2020, sorry. Okay. Alternatively, we want to consider the end of the month or in the middle. If it's in the middle, we shall say 15 March 2019 to 15th October 2020. Okay, so when you're counting, okay, now let's go with maybe the end. Showing 31st March 2019 to 31st October 2020. So when we count, how would it go, or how would we go about it? You're saying, if I go with 1st March, you're saying March, April, May, June, July, August, September. Okay, October is not there. All right. Or if you go with 15th March, you're saying 15th March, then 15th April to be 1, 15th May to be 2. So May, June, July, August, September, October 15th. Okay, so I'm counting 7 months. I don't know how many months you guys are counting. Maybe someone can share with me in the chat. But I'm seeing 7 months. Okay, March, April, May, June, July, August, September. You can't include October. So I'm counting 7. Okay. Can you just refer to the question again? Remember, as if there were 6, but I'm saying 7. Let me see again if maybe I've taken. They say that we bought it in March and we sold it in October. Yeah, those 7 months. Okay, so if I take you to the question, okay, we're saying we're going to depreciate for 7 months. So it will be the cost, which is 10M, times 20%, okay, which is 20%, which is the depreciation charge, 10 times the number of months, 7 out of 12. Okay, so our depreciation will be this. I have 1. Okay, I don't believe this is the answer. At least I call it the marking gate. You guys, can someone convince us how we get the 6? Because I'm not seeing the 6, I'm seeing 7 months. Let me see if it is 6. Not seeing the 6. Guys, please, someone can help out. How do you count the 6 months? Because personally, I'm getting 7. From March, saying March, April, May, June, July, August, September. Okay, I don't know, we get the 6 months. So someone please, if you can help, let me see if those who are. So, Daisy, any idea? Sito, because I'm not getting 6 months. They're saying, Mariam. Yes, Zay. Zay, kindly help here. Are they 6 months or 7? That's what I'm getting 7.
Good evening.
Yes, how are you, Zay?
Yeah, I'm okay. I've just joined right now. But I thought over we are following that the year begins on April and ends on March.
Yeah, but they're getting accumulated depreciation, so that's on the end.
Auntie, forgetting the years, eh? So I thought we could calculate like when did this year the purchase begin? Anyway, for it, it's a full year. We are depreciating it fully. So
But
it's that.
But Frank said that policy didn't work. That policy didn't work, the one of 4. So what do we do? Because okay, we're saying since it was bought in March
2019, but that year started way back in 2018 because the year we were preparing for was at 31st 2021.
Yeah.
So I thought it started in 1st April 2018, then up to March 2019.
Okay, so this transaction will be in this year that you're going to start.
So another one, and the other one started in 1st April 2019 up to March 2020. We add the asset.
Yeah, getting your point.
So in 1st April 2020 up to March 2021, that's where we sold our assets.
So you're saying 2 years?
And for me, I had did 2 years in the paper because I had ignored when it was sold. But as you've just said, that he said that we don't ignore those days.
Yes. Okay.
So for me now it could be 2 years. Plus this month from 1st April up to October 2020. That's what I think.
Okay.
Size.
Thanks for your contribution. Okay, now that is what actually I also did in the exam. But when I talked to Frank, he said, if they gave me marks, it was a mistake. That's supposed to be, since we don't follow the other policy, is it full depreciation, what? Just a portion based on the number of months that you've been with the asset or you have used the asset. So what I'm trying to count here, okay? That the time for disposal, okay, let's go with what I feel I'm comfortable with it. In case of any corrections, I'll just refer to the lecture again. Okay, so in October 2020, this is what I think. As I already counted here, I'm saying I'm getting 7 months. Okay, because the disposal happened in October 2020, not 2021. So the years can't be more than 2, just 1 year. As you can see, actually less than 1 year. So therefore I have 7 here. Okay, so when I have 7 there, that's what you have. Why don't we depreciate that one? 10th and 31st March 2020. Okay, maybe to add something. We first depreciate for the year that ends, the first year which ends just short way. If I just put here the working the years, saying depreciation, saying the carrying amount. For the year that ended, ended 31st March 2019. 1st March 2019. We acquired the asset in March, or yes, in March. So assuming we acquired it at the end of the year, you're saying there's no depreciation here. Okay, so we shall have the carrying amount the same as 10M. Then we're saying for the year ended 31st March 2020. Okay, we have 20% of the carrying amount. So we end up having this minus that as 8,000. Then for the year ended, not for the year, till the date of disposal, till date of disposal. I remember we disposed it in October. Okay, so in October we're saying the from March we're saying you have April, May, June, July, August, October. Okay, so this is where the 6 months come in. So you have 20% of this, the carrying amount, times 6 over 12. Okay, so it will be 800. Then you have this minus that as the carrying amount. I think this is cover. So what we're saying, how do we get the 7 months? Okay, I've just elaborated here. Ashabe. Okay, we're removing this. So this is the working. We're saying that the asset, first of all, was sold, not sold, was bought in March. Or is it purchase date? Yeah, purchase date. It was bought in March 2019. So we're saying in the year that ended 2019, we didn't depreciate anything because it was bought in the same month. So probably towards the end of the month. And therefore we're saying the carrying amount must have been the same. But for the year that ended 31st March 2020, we're going to depreciate the full year because it was at the beginning till the end of the year. So that's the 20% of the carrying amount then, which will give us 2,000, and then the carrying amount of 8,000. Then in the year of disposal, you're saying you're going to depreciate till the month of disposal. Remember, this year ends on 31st March 2021, but the disposal happened in what? In October 2020. So therefore, we're going to depreciate. Now, in depreciating, we're saying you count from when the year started till when the disposal happened. And when you count those, there'll be 6 months. We're saying it will be April, May, June, July, August, September. April, May, June, July, August, September. Okay. So you're saying that's where the 6 months are coming from. All right. There are 7 months, not 6. How are you counting? Okay, because with this, why there's no depreciation here, you're saying it was bought and what? On 31st. March. Okay, so if it was bought on 31st March, you're saying we should count till when? Saying April, May, June, July, August, September. I'm actually getting 7 still. Halima, you're right. No, they're actually 7. Because if it was bought on 31st March, that's why you're not depreciating it here anyway, first time. You're not depreciating it here. So meaning it was bought on 31st March 2019. So you have a full year, and it's saying the sale must also be made on 31st October 2021, not 2020. If I'm going to count, I'm saying I'm going to count from when the year begins, which is April, May, June, July, August, September, October. I'm getting 7 months. Guys, someone should count again, but man, I don't know. So what do we do? We go with a 6 or 7, but clearly it's 7. So just for the marking gate to be, should I just use 6? Yeah, I'm also saying 7. Okay, so just for the marking gate, let's use 6, but ideally, like you agree with me, it's 7. Okay, so we have 800. Okay, then we continue. So this is our accumulated depreciation. You add the depreciation amounts together. You add this together. You have 2.8. Okay, so this is our accumulated depreciation. Therefore, it is what you dispose of. So when you come here, you're going to debit accumulated depreciation because it has a credit balance, and credit what? Credit disposal account. Okay, with these figures, which is 2.8. Okay, so when I do the double entry, I'll come here in my disposal account and I'll put here accumulated depreciation, which will give me 2.8. Okay, then the last part is the proceeds. What you got from the sale. So for proceeds, we say that ideally, what you're supposed to do is you're supposed to debit cash in case you receive the money and credit the disposal account. That's what you're supposed to do. Okay. So the proceeds were 7M. This is what was supposed to be done. But what they did is that instead of crediting the disposal account, they credited